Hey guys, welcome back to another update for natural gas. Now the daily chart's still showing bullish momentum, although there is a hourly divergence, bearish divergence in place, so just be mindful of that. Before you go any further, make sure you hit that like and subscribe button to support the channel, and also reference the +1 videos for a deeper dive into some of the trading strategies we cover. In terms of the outlook, as of today, October 1st, natural gas demand is growing modestly around 1.5% year on year, with Europe and North America firm, while Asia softens amid high LNG prices. Supply is expanding around 5% through new US LNG exports, though risks of delays or sanctions persist. Prices remain elevated and volatile, driven by weather, shipping constraints, and geopolitical shocks. Europe continues shifting from Russian pipeline gas to LNG, emphasizing storage and diversification. Key risks include the Russia-Ukraine conflict, Middle East tensions, export restrictions, and infrastructure hurdles, all of which could tighten supply and trigger fresh volatility. So starting off with the natural gas charts on the weekly, you can see there the price is broken up into that moving average range and it's just broken through that. So that's a very slight bullish momentum on the weekly. The CCI is already above the moving averages, so that's a positive. I'd like to see these moving averages start curving up and widening like they did back here. That'll give us a lot more confidence on the weekly bullish movement. On the daily, however, we are already in a bullish momentum with the CCI and the price above the moving averages. Now, we've got a bit of a fair value gap there, which means the price may come back into that range possibly to retrace. And that's why we look at the smaller time frames to see if there's any downward pressure happening. And working backwards, you can see here on the CCI is declining. So lower highs on the CCI versus the same period higher highs on the price. Now it hasn't started to pull back yet. That could actually keep rising. Now if it does pull back, we'll draw a Fibonacci back to that low. Let me just draw one now just to demonstrate. We'll bring a Fibonacci back to that level, and we expect a minimum retrace to that 23-38% range. That's a minimum retrace. But again, it's still a bit too early to call this. I'm going to let it go. I'm going to delete that Fibonacci, but also that target range. As soon as that starts pulling back towards that moving average range, then I'll recalibrate and draw that target range again. But this could actually go higher. But at the moment, the CCI is looking bearish at the moment on the hourly. Now, if we go to the back test, I've got a couple of back tests to show you here. First, the short positioning. So going short from that arrow there on the daily, you would have taken short positions when the price broke below the moving average, and so did the CCI, and you would have gone short here on the hourly. And again, notice we've had a few little bullish divergence throughout this period, and you would have taken note. And the reason I've got you zoomed out here is just want to be able to see more specifically these moving average bands on both the CCI and the price. So for example, when the price moving averages start bending up along with the CCI, that's where you would have closed out that position there, and you would have been up at that point about 6,700. Obviously, you avoid going short when it's in the up, or you avoid going long full stop, but avoid going short when it's in an uptrend on the hourly. But also watch the daily, make sure it's still in a downward trajectory. Then down here we had a longer level bullish divergence, you can see there. Then it finally started breaking up, and you can watch those moving averages, and that's where you would have then started going long with the daily CCI breaking above the moving average band, and so did the price. And that's where I've got this upward arrow, and that you would have stopped taking short trades and start taking long trades. And again, same sort of deal. That's where we go to the long positions. From here, going long, you would have watched out for any divergence. We had a small divergence there. You theoretically could have closed it out on that point there when the price started, the moving average started bending down, and so did the CCI. You would have probably been around about the break-even point there. Then wait for the long positions again on both the price and the CCI to take long positions, again watching for any divergence. Up until where we are at the moment, as I said, we've got a bearish divergence now. So if you're in the trade going long, either close it out, or if you're not in a trade according to this strategy, wait until this starts moving up to the upside on the hourly. So for BOIL on the weekly, that's bearish below the moving average of the price, and so is the CCI, so bearish momentum. On the daily, that's actually currently broken above the moving average bands on both the CCI and the price. Although notice those moving average bands on both are very constricted. That's a bit of a consolidation, so this could go either way. It could actually break to the upside, continuation, or it could actually break further to the downside. But at the moment, very likely it will get a bit higher. But again, I'd like to see these moving average bands start curving up and expanding like they did back here. And that was a bit of a false reading back there, false break if you like. But again, reading the weekly, if you're at that point, you would have been going predominantly short according to the weekly if you're going in this direction. Now that's the daily is cautiously bullish, and on the hourly what we're looking for is any divergence, and you can see there the price and the CCI are moving in tangent, so there's no divergence currently. Last divergence we had was back here, a bullish divergence versus the price, and it bounced, just touched our target and then fell further to the downside. That's the hourly. Now going to the back test, again on the daily, we take predominantly short trades from that point, indicated here on the hourly. And again, notice there was a bit of a false break there. And at that point on that area there, that coincided with this period back here when the price moving averages started bending up, and so did the CCI, and you would have closed it out maybe with one contract open. You would have been up slightly there, so that still would have been positive. Avoid going short during that period, obviously, and avoid going long as well. Now, this case, again, you may have been caught by going long in this case. Just again, notice the moving average band was bending up slightly on the daily. And again, you would have just been cautious about going long. You might have closed it out with a small loss once that confirmed to go to the downside. So always pay attention and use your stop loss on the daily at the very latest. And then going short during the 1 hour time frame again, paying attention to any bullish divergence. And the last one you had, as we said, was back here with this longer term one, which went for a few days. But at the moment, you'd be doing quite well. And again, you'd be closing out your positions with the price CCI moving to the upside. And at this point here, you would have closed it out probably somewhere there with a couple of contract, or maybe one contract open there, and at that level there. So for KOLD on the weekly, first off, the price is above the moving average. The CCI is actually broken into that moving average band. So if you're trading on the daily, you'd be closing out your positions, but somewhat neutral positioning at the moment on the weekly. On the daily, you can see there the price is broken below that very narrow moving average range, and so is the CCI. So bearish momentum at the moment on the daily. You would have been going long from that period back there on the arrow, where the arrow is showing there, and I'll show you the back test in a minute. On the hourly, again working backwards, we try to identify any divergence. So you can see there the CCI is moving in line with the price, so there's no divergence to be concerned about so much. The last ones we had were back here, and we draw these on the chart because what we do then is we go to the back test. So you would have been going long during that period from where that arrow is drawn, when the CCI and the price broke above the moving average band. And watching the daily CCI especially, you might have closed that out at that point there, and another close out at the latest at that point there as well. But during the hourly, you also pay attention to any divergence. And again, you draw these little divergence on the 1 hour chart. You can see there very clearly you got lower highs during that period versus higher highs. And at any time there, you would have closed out your positions, maybe with the 1 or 2 contracts open. And again, going long, wait for the price and the CCI to start bending up, and you would have gone long at that point, closed it out, and that little bit of a downtrend. Going long, and then focusing very closely on that bearish divergence as it's developing, and you might have taken some profits and stopped trading during that period, and then avoid going long during that downtrend, then start going long again from here, when both moving averages of the price and the CCI are in an uptrend, and so on. And lastly, looking at UNG on the weekly, the price is below the moving average band. The CCI in this case is broken into that moving average band. So if you're going short, probably wait off until we see the CCI continue on a downtrend, and that in which case the price should also start moving down into a bearish momentum as well. On the daily, that's actually bounced off this support at 1172. And it's bounced above the moving average band on the price and also the CCI. Again, notice the CCI and moving average bands are very narrow, which indicates it's a consolidation period. So we might see it reverse any time. So at the moment, showing cautiously bullish momentum. Now, if we go to the 1 hour chart, look for any divergence. Again, working backwards. And again, there's no divergence that I can see there. The last one we had was back here. We had a bullish divergence, and that bounced up, hit our 23-38% target range, consolidated for a while, then it returned to the downside. On the back test, going short from that period back there, you would have taken short positions only. Again, this one is a bit tricky. It started bouncing up in through the moving average band. So you have to watch it very carefully, and especially on the hourly, look out for any divergence, any bullish divergence in this case you want to avoid. You had a little bullish divergence there that bounced, and you would have closed it out the latest when the CCI and the moving average band on the price started bending up, so you would have got out somewhere there. Again, going short during that period. Avoid trading during that period. Going short again during there. Then you saw this bullish divergence, and you would have avoided or closed out your positions at that point. Going short, so long as the price is in a downtrend and you get a bullish divergence, you can let it go, although you got to be careful and watch it, and you would have probably closed it out at that point there when the moving average band on the price started bending up as well, and that would have confirmed that bullish divergence. Then you continued on a downtrend. You probably could have opened it again at that point and close it out again there. Open it again there, close it out. And close it out until that point there. Open another position, close it out, and so on. As long as both the price and the moving average bands or the CCI are aligned, you can trade in that direction, so long as it's moving in the direction of the daily chart. So if you enjoy the content, subscribe at least on the free trial to my Patreon page, where I publish weekly bullish shares across the world's markets. Hit that like and subscribe button. Thanks for watching, and talk to you in our next video.